All right, guys. So we have a trade that is going to be a little bit valid for us to trade on gold today. Now, let's first break down the yesterday's trade that we took yesterday on gold, though I did not actually put this up. So sorry for that. But this is what happened. So our strategy simply says that we have a break of trend line and it becomes a counter trend line. And then after that, we take a trade on a retest at a psychological level. Very simple. So we see this is a first touch on this trend line. This is the second touch here. This is the second touch over here. And then on the third touch, the market comes and then breaks above with this green candle. Very serious. Then after breaking above this green candle, it trades up to here, which is another psychological level. Then the market starts retracing. When that happens, for us, we are simply looking for entry strategies. We want to see how we can enter into this market. So what I do, that has been 1 hour. So I go to 15-minute time frame to get a more refined entry. So you see, when we come to 15-minute time frame, the market comes, here's where the break was, and then market drops below, and then comes and feeds into the psychological level. Now, when the market reaches the psychological level, what next am I looking for? I am looking for the market to touch the psychological level, reject that psychological level, and then after that, we want to see a candlestick pattern that shows that we are reversing the market. So we see the market comes here, there's no candlestick reaction that comes, breaks through the psychological level. We are waiting. We are patiently waiting. And then we are saying now, when the market breaks below, we are most likely going to retest the other trend line, which we call the safety trend line. So you see this trend line also has been holding the market from here. It held the market. So we see the market comes and then breaks below that trend line and then comes to this area. So when the market reaches here, we see the market gives us a little bit something like a tweezer bottom here. Now, if you do not understand these candlestick patterns, I have put the 4 candlestick patterns that I use on my YouTube channel. So you simply just have to go to YouTube, cashpips, and then you look for the video that is on candlestick. I have labeled it under free course. You are going to learn the candlestick patterns that I use. The tweezer bottoms, the engulfing, the pin bars, and also the morning and evening stars. Just that. That's what we use. So you see, this is something like an engulfing. This is a tweezer bottom. Why? Because it has relatively equal lows on these candles. And then the market gives us that bullish entry. So when the market comes here, this is where we entered from. But being sure of the strategy, what do? We could have entered the trade from this zone and then jump on the trade and hold it for the high. But that's a little bit risky. So we have to add the extra confluence of the candlestick pattern. So we see the market comes and gives us this candlestick pattern. So we take that trade from here and then stop loss right below the trend line that is a safety trend line. And then we target the highs that we can always have. First target is always the next psychological level. That we have always debated on that and we have concluded that's what we're supposed to do. So the next trend line is the next target is this psychological level. The next target is supposed to be this trend line, which is also another target. And then the other target is we wait for the market to break that trend line. That is a safety trend line, which ideally is supposed to be this trend line here, because this is what is acting as our safety trend line. So the market is supposed to break below this trend line for us to be able to be sure that we are going to get out of this trend. However, we always keep on refining our safety lines as we move our stop loss. So for example, you move the safety line, which was here, get a touch point. As long as we get a touch point, we create another trend line, which acts as a safety trend line. So we can see this safety trend line has again been broken. What does that mean? It means money to the downside. So the market has broken below this trend line, which was now the refined safety trend line. And right now it has broken below very, very significantly here. And you can see the market is building up to come into psychological level, the 4,800. So most likely we want to see the market come into this trend line and the psychological level, retest that trend line, retest this green trend line, and also give us an entry around here in the psychological level. So far, so good. I have not gotten an entry so far. I would have taken my sales, but I've not seen any entry. Now, what is the significance of this sale, or where do we want to target this sale? Remember this trend line. This has been a long time trend line. If we go to 1 hour, you are going to realize that this trend line held the market below it for some time. We have the first touch over here, the first touch, the second touch, the third touch is over here, and then we see, so those are 4 touches, 5 touches, and then the market has come and broken it. Breaking this trend line means significantly we have now reversed our trends to the upside. So that means we are going to be looking for buying opportunities on gold. But it has broken this safety trend line. So if you want to reverse the trades, you can reverse them from here. Take out the buys that you took yesterday, and then now take in the sales from this zone to target now the retest of this trend line and the psychological level. So we want to see the market come to drop again to retest this trend line that was broken, a 1 hour trend line that was broken yesterday. We want the market to come and retest it. Very simple. Now, this is going to be, if the market comes to this area, this is going to be one of the best trades because it has so many confluences. Number 1, we have a support and resistance level here. Number 2, we have a trend line break and retest there. Number 3, we have a psychological level over there. And most likely, it is going to feed into this trend line, which is going to give us almost up to 4 confluences. The last one that we want to wait for is we want to wait for the market to come and give us a candlestick pattern. Once the market gives us a candlestick pattern from there, then when it gives us a candlestick pattern from here, then we're going to take our buys without thinking, and then we're going to hold the market for as long as we can be able to hold it. This is how simple the strategy is. Now, let me take out this, but I want to leave this line here to act as our stop loss line or our safety line once the market gives us an entry. When the market gives us an entry, we're going to look for a potential place to take our stop loss using that line. If not that, we shall create another one. That's how we do it. Now, let's look at another instrument that we traded yesterday. Yesterday, we also had a trade on GBP/USD. Look at what happened on GBP/USD. Same strategy, same everything. The market comes and breaks. This is a trend line. This is the first touch. This is the second touch. And then the third touch was here. So you can see this is a third touch. And then the market comes and breaks above. What happens? As cash pips, what do? We wait for the market to come and retest that trend line at the psychological level. So simply we wait and the market comes and breaks below this. But at this level, you can see this, the market gave us rejections, pin bars, 1, 2 of them, exactly. So that's what we want to do. As if that was not enough, the market gave us an engulfing candlestick over there. This, what do? We take our buys from there and we look for a safety line, which was this now. This is a safety trend line, 1 touch, second touch, and then we take our trade and then put stop loss right below. We said it has to be diagonal to this safety trend line. And then what are we targeting? First target is psychological level, this. And the second target is the trend line, this. And then the third target, once the market comes and approaches that level with enough momentum, we are waiting and holding that market until it will give us a break of the safety trend line. So here you can keep on refining the safety trend line. For example, you can draw another one from here, like this, from here to touch this one, right there, just like that. Very simple. Nothing much, just very simple. We are drawing this level line from here and then we touch there. Why? Because I want the market to touch this point and this point. Now we can refine it again, baby. We can refine it again. We can refine this again, and then we have that as our safety trend line. So this means that we are now going to be moving our stops to a higher levels. So you can see how GBP/USD is still trading high. However, there is a resistance here. Do not be so happy. There's a resistance level here. You must put it into consideration. This is a swing point, an old swing high. So with that swing high, we are most likely going to reverse the market off of that place. If that happens, we want to break one of this level, we'll test it, and then we are going to go again onto our sales on GBP/USD. Another setup that we had was on AUD/USD. This happened on Monday and has been holding from Monday. So you can see the trade came. What happens is very simple. I said market comes and breaks a trend line, which has been there, number 1. Number 2, that's the second touch. And then on the third touch, the market comes and breaks above that level. Once it breaks above that trend line, what we do? We wait for a retest of the trend line and a psychological level. Retest of the trend line at a psychological level. This trade gave us the least or the most minimal entry with the best stop loss. You can see that. This stop loss would have been even refined up to this zone, because I'm telling you, once you have this safety line and it has created a trend line, you don't have to worry. That is what you have. So what happens? The market comes and we put our stop loss there. So market came and gave us an entry at this point. Let's look at the entry. Let's look at the entry, really. Let's look at the entry. What happens? Why did we take this trade? You can see this candlestick. This is an engulfing candlestick. Market gives us a red candle, and then a green candle comes and takes out the red candle. It strips its high. So that means we have reversed our trade. Take an entry from there, and then we are taking first target is always the next psychological level. And you can see when the market came to this area, it was reacting. So if you are an intraday trader, you would have taken out some money from here. And then the next target is the trend line. The next trend line, the most next trend line is this. And then after that, we can now hold the market to as long as we can hold it. That is AUDUSD. Strategy works. Euro USD, same thing. Market comes, there's a trend line here. There's a trend line over here. The market comes and gives us a touch point here, and then it comes and breaks their trend line. Very, very good. When the market breaks this trend line, what happens? We wait for the market to retest that trend line at a psychological level. Very simple. Market comes and reaches there, it starts rejecting the psychological level. Once the market reacts like this for us, what are we seeing? We are seeing a little bit of money. So we take an entry from this level, put our stop loss right below, and then we are targeting one. The first one is next psychological level. Second level is we look for any trend line that is around there, low, high trend line. If it's not there, then we're going to rally until when the market breaks the safety line. So the safety line, we can keep on refining, like I said. We can keep on refining the safety line depending on how the market is reacting, creating the market structures. We can refine this now from here. So we can also refine this safety line from here like this, and we create that as a safety line. Very simple. So we have a safety line that has been created again, and we're waiting for the market to come and react off of that safety line. Once it breaks below, we are saying buy to Euro USD. The CHF, that trade was valid. The trade could have a move, but it was not reasonable for us. This is what happens. This is what I'm saying. The market gave and broke this trend line. What do? We wait for the market to retest that trend line on a psychological level. Now, the time the market gave the move down as when the market has not reached the psychological level. Trust me, I cannot deceive you that I traded USD CHF because it did not really fulfill our strategy and criteria. So it did not fulfill the criteria we always follow for, so our playbook was not correct, and we left it. Even if it gave us trades, the question is, did you know that this market is going to move like this? You did not know. So we are anticipating that it's going to move like that. So because we are just anticipating, in case it doesn't give us what we want, we are not trading because we are not in a rush, but we want to make money. That's USD CHF. So let's keep on watching gold. Gold is down, which is now giving us more hope of getting an entry from this level. We are getting hope of getting a trade from here. The rest are not giving us anything right now. So we're waiting for gold to come and give us an entry here. If it doesn't give us, we leave it, we wait for it here. We are going to buy gold from this point. If it doesn't give us a sell from here, we are waiting for it to drop and give us a buy from here. And then we're going to buy gold, and then we're going to hold gold. Thank you so much. This is Cash Pips. And if you think this is something that you'd love to be a part of, I just implore you to come and join us. Just send me a DM, and I'm going to help you to join the team. I'm having a challenge of 50 people to make profitable in 3 months, and I know I am going to do it. If you are interested, just put I'm interested, and I'm going to put you on the team, and we're going to go into the market to make money. Simply comment, I am interested, and I'm going to help you. Thank you so much. Bye for now, and I hope to see you in the next one.